Welcome back to Dukascopy TV. Joining me to discuss microfinance in the investing world is Daniel Schriber, Director at Symbiotics Group. So can you tell me, how has the microfinance changed over the years?
Basically, it has evolved towards something more commercial and has entered, I would say, by the back door, the investment world around 10 years ago, when the first microfinance funds actually have come to life. And this is mostly linked to the fact that you had suddenly this perception that microfinance was actually an amazing thing in the investing world, because you could do good and at the same time have some returns. There was a kind of a buzz about microfinance where suddenly people said, well, that's the solution to eradicate poverty. I guess there the message was probably a bit too strong, in the sense that it is certainly, and this is something Symbiotics has always said, it's definitely something that will help actually the people at surviving. It's something that is extremely needed. People need financial services, and it is, however, too much to say that it is the solution to eradicate poverty. It's one of the tools that is at our disposal to try to eradicate poverty, but it's definitely not the only solution. When the financial crisis started, microfinance as well has had some impacts, and we have seen in some countries actually over-indebtedness crisis, and this has brought a lot of negative image then to microfinance.
How has Symbiotics evolved from around 7 years ago into the broader investment world?
Small enterprises need more than just credit. They need financial services as a whole. They need savings, capacity payment services, all this kind of other services, money transfer services. They need this as well. And just look at the amazing success of Western Union, for example, that really is a need of a lot of immigrants actually to be able to send money home. So there is a lot of services that poor people actually need in the financial sector that were not serviced. So we were talking then much more about financial inclusion, how to include these people into the financial world. Investors want to be sure that the money they are investing is used actually for good purposes, basically, so that they don't have a negative impact over the population. And so it's extremely important to have today, and we are talking about impact investing, because we want to make sure that there is a positive impact at the end of the investment.
And what difference do you think microfinance makes to the economy?
Well, microfinance has different roles, I would say, in the world, and depending on which countries. There are a lot of countries where, especially in rural areas, where populations simply have no financial services providers around them, because banks consider microfinance as being consider this segment of the markets as being too low and too costly in the end, and not profitable enough. So they are staying in urban centers, and they are obviously looking for people who are in needs of more money, because it costs a lot actually to do a $200 loan if you compare to a 1 million or a 10 million or even more. Microfinance is bringing this inclusion to the financial services to people who didn't have access before.
And what do you see happening to microfinance in the longer term? I
think it's something that today is counting in the investing world, and that has an amazing potential, because there is the strongest growth in microfinance is coming from countries which are not yet even really called emerging markets, but are really the newcomers. So we are more talking about African countries, about very poor Central American countries, or even in the poorest country of Asia, more than India or China or Brazil. So typically the BRICS are already somehow ahead of that move.
How has uncertainty with economies impacted microfinance?
The first thing is obviously investors in Europe or in the US have been more reluctant during the crisis year to invest heavily in a sector like microfinance, because it was somehow there was this scare about any investment, and microfinance being something a bit different was at the same time a bit seen as attractive. So one of the messages is often, well, we love what you are doing, but the timing is not good. So I think this has impacted, and we have seen that the growth of the microfinance investment vehicles last year has been slower than in previous years. So we have seen clearly an impact on the amount that is available to invest in emerging markets in the microfinance sector. Now, what is very interesting, I think, is that if we look fundamentally at the microfinance industry around the world, in really the end clients, the micro entrepreneurs, in general, they have resisted very well actually to the crisis. There have been a few cases where they have had difficulties to pay back their loans, but if we look in the wide majority of the cases, these microfinance is pretty much decorrelated from the global economy, because they are very much depending on local markets, which don't really interact with the global economies.
Well, thanks so much for joining me today, Daniel, and thanks for your insights. Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now, though, goodbye.